What's going on, Culture Crew? Thank you for joining me today. And oh my God, did you hear about Jeff Bezos stepping down as CEO from Amazon? Not only that, but we're going to talk about Google smashing earnings. We're also going to talk about the Wall Street Bets crew, if they're still hanging on for dear life. We're going to talk about Apple investing $3.6 billion into who else? A little automobile manufacturer who's going to be building their Apple Car. So that's pretty exciting, but at the same time, a little bit troublesome. We're going to talk about why. And then lastly, we're also going to jump into the CCIV stock that is supposedly merging. First, let's get into the earnings for Google. Google has been one of the safest plays, guys, that I think next to Tesla has been making people very wealthy ever since its inception. That stock is up 8.7% today, up to $2,087. A very healthy jump. Now, Google hasn't been really getting that much, returns, I would say, or increase in value of the stock in past years, but this year makes it a little bit different because they've been crushing their ads revenues, guys. Their ads revenues, and I guess it's the YouTube videos, right? I guess it's all the videos I've been making, and that's why they're doing so well. So you're welcome, Google. Even though they're going through this whole antitrust thing that's going on, I think that Google is going to be able to skate through with that. I think the whipping boy this time around is going to be Facebook. But I just think that Google at this point is just way too big to get split up. And if they do get split up, guys, it's just going to be able to unlock more value for us as investors. If you're invested in it, and if not, it's not too late. I'll tell you why. There are some crazy price targets for Google in the very near future, and hopefully you don't miss that. Their revenue for quarter 4 of 2020, guys, it was up 23% to 57 billion, and 46 billion of that, guys, just came from ad sales, which is insane. It's pretty good. That net them around $15 billion or $22.30 this year, which, like I mentioned earlier, smashed estimates. They came in at around $15.95 a share. So they're flying high right now, if I could say the least. And what I mentioned to you guys just earlier, what price target analysts have on this, well, how does $3,000 per share sound? That's what some analysts have as a target for this. I can't disagree because being honest with you guys, people are using YouTube now, I believe, more than ever. Google has been really crushing it ever since the pandemic. So many people spend so much time at home, and any YouTuber can tell you that the ad rates definitely jumped in 2020 or later part of 2020, which made YouTubers a considerable more amount of money. But guess what? Google gets to partake in more than about 50% of that. So they're also doing just fine. So that's really helping Google, and I believe it's going to continue helping Google into the future. Next, let's talk about Jeff Bezos saying, sayonara, I'll see you later, after 26 years as CEO at Amazon. Man, he's taken this company into the $1.7 trillion company that it is today, because now he wants to focus on other things. He has other things on his horizon. And when I first heard this, I said to myself, you know what? I think he just wants to focus on working on Blue Origin, which is his space company, because he sees Elon making some really big advancements in that field. So I think he's getting a little jealous, and he wants to put in some more time over there. As you can see here, he wants to bow out when the company's worth about almost $2 trillion, and he also crushed earnings. So the same day, which was yesterday, that they reported earnings, he also reported that he's going to be stepping down. Now today the stock is down 14%. So this is important for you guys to pay attention to. It's down 14%, guys, but their earnings were beast. They did very well. I'm getting to that in just a moment. So even though he is stepping down, someone else is going to be taking his place by the name of Andy Jassy, who is the CEO of AWS, which is also Amazon company. It's Amazon Web Services. They have servers that you can use to host your websites and do all the things that you need to do online without having to have the servers all up in your office or all up in your house. So at first, this company really didn't get much attention from most analysts and investors, but it actually has turned out to be Amazon's most profitable division, believe it or not. So this gentleman who runs the show there has been with Amazon since 1997. So he's not a newcomer to the company. And Jeff Bezos trusts this guy profusely. If not, he wouldn't be putting him in the role of CEO of Amazon, which is probably some big shoes to fill. But it's not like Jeff Bezos is going to retire. He's still going to be the chairman of the board, which is he's still going to be very hands-on, but he's not going to be involved in the day-to-day stuff, which you can't blame the guy. I mean, come on, he's worth what, almost $100 billion. So he wants to maybe work on some passion projects now. Let the guy live, right? Let's let him live. But why I'm telling you this is because the stock is down, but AWS just had, which is the Amazon Web Services, they just had their biggest increase ever in revenue. They were up 28% from the prior quarter of last year, which helped with earnings that were beast mode. The earnings were $125.6 billion. That's up 44% from the fourth quarter of last year alone. That means that they were able to hold on to $7.2 billion in net income, which was double that of the year before and double of what the predictions were from Wall Street. Guys, I'm telling you right now, Amazon is looking really good today, all right? Now, analysts have been giving this company a price target that you guys will not believe, all right? What do you think? Leave it down below in the comments. How much do you think the price is going to be for Amazon in the next year or two, right? Give me your estimates, guys. It doesn't have to be right. Just put it down below. Well, analysts think that this is going to be a $5,000 stock, currently trading at around $3,000. That means you have a lot of room for the upside. And this is something that I always reiterate to my students, and if you guys are interested in joining our group, I'll leave a link to that down below. I'm always telling my students it doesn't matter what the price of the stock is, because percentage increases or percentage decreases are the same no matter whether you own 1,000 shares of a company or if you own 1 share of a company, or even if you own a fractional share of a company. Because even though Amazon could get to $5,000 one day and it's currently trading at $3,000, it doesn't mean you can't go into a company like M1 Finance, or you can't use a company that offers you fractional shares, and you can just get as much as you can afford. If you can only afford $100, then use $100 and buy a fractional share. But this company is a very solid, guys. So if you don't have a lot to invest, don't resort to buying penny stocks. You can get quality stocks like these that are on sale or are on sale for their earnings, and go ahead and buy some, guys. This is a really good one. Next, I want to talk to you about the Wall Street Bets crew. What is going on with these guys? We're not hearing too much from the news. It seems that they've died down and things are not being brought up to us every 5 minutes. So I want to tell you who the biggest winners were out of this whole fiasco or mess or disaster, I guess at this point, as you may call it. The biggest winners are Mudrick Capital. They booked a $200 million gain, guys, on GameStop and AMC. This is insanity, guys. These guys cleaned up. Obviously, they had an investment in both of these companies before the companies shot up, but they were smart enough to sell when the stock was way hyped up and overpriced. Another company that did really well is Silver Lake. They took home $113 million after they converted some debt that they had against GameStop, and they converted it into equity and then sold off the shares. And lastly, we have DFV, or Deep Effin' Value. This is the guy who was running the show over at Wall Street Bets. He is still not looking too shabby, guys. I will tell you that. He is still looking pretty good. He recently posted on Twitter that even though yesterday he had pretty much his ass handed to him, he is still up millions and millions of dollars. He was previously up about, what was it, 50 million or so. It's come down considerably from there, but he can still bow out right now if he wants to and walk away with almost $9 million.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
But he's holding. He's still holding, guys. So let's see where this might take him. Next, for you car aficionados out there, we're going to be talking about Apple and their Apple car, right? Most of us are like thinking to ourselves, like, this Apple car is going to be out of this world technology. It's going to be quality beyond quality. They actually just announced that they're going to be putting, they did put a $3.6 billion investment into who else? Kia Motors. Kia Motors is now going to be responsible for building them a facility, a factory, where they're going to assemble their Apple car in Georgia. They've taken a piece of the ownership in Kia Motors by putting in the $3.6 billion injection. But my only question, guys, is how much quality do you think that car is going to be? Because Kia is really not known for making luxury vehicles. I mean, they've got a few cars now that are pretty nice, but do you think that Kia is going to build something that's going to be up to par with what Apple is used to delivering? Leave it down below in the comments, because I personally, for one, I'm confused as to why they would have picked Kia. I mean, that's one of my only concerns, but will they build a quality project? Only time will tell, right? Let's see. But today, Kia Motors is up, obviously 10% because of the news, and meanwhile, Apple is still floundering around. I have no idea when Apple is going to start pumping like it should be, because I did mention that Apple should be going to about 175 to 2.25 this year, and we're just waiting any day now to start seeing a little green come out of Apple. So we will see what happens with that. All right. Next, let's talk about everyone's favorite SPAC, which is CCIV, which has announced that they still have no idea who they're going to be merging with. So if you guys think they're merging with Lucid, well, we don't have that confirmation yet. There is a lot of people speculating, you know what, not a lot, a ton of people speculating. And the reason why this is dangerous, guys, is because the price now, guys, is over $33 a share. And it may not sound like a lot of money because you look at the share price, but what you have to look at is how much that share price is valuing the company who hasn't yet delivered one automobile, who doesn't have a facility to build cars as of yet. They haven't pumped out anything yet. They do have a facility where they're going to be setting up, they're ramping up right now, but they still don't have any cars rolling off the assembly line, guys. So what this means is that you're investing into a company on pure hype, speculation, renderings, and also a concept car, right? You have that. You have a couple showrooms, and you've got some wealthy billionaires that are invested in the company, but there's still nothing being produced. Meanwhile, the company is being valued at $45 billion with the amount of capital that's being flushed into this SPAC, the CCIV SPAC right now. So I'd be very careful with this, guys. If you're just getting into it right now, I would say be very careful. I personally am going to be sitting by the sideline. I'm not going to be buying it. I'm not going to be shorting it. And the reason why is because if I would have gotten it cheaper, around the $10 where it was before, if I would have got anywhere between 10 to 15 bucks, I would have invested too. But right now, getting in at $33, and let's just say that the merger doesn't go through, that stock is going back to $10, guys. So you could lose 66% of your money. So I wouldn't want to take that risk. I would rather wait for the announcement to be made, because a lot of times stocks run on the rumor and they sell off on the news. So you might get a better price once the actual news is delivered. So maybe you'll get it in the mid-20s, maybe you'll get it in the 17s, 18s, we don't know. But what we do know is there's mass hype right now, guys. So I would not consider buying right now. If I were you, I'm definitely not buying. So hopefully you guys take that and do some of your own research with it, because I cannot give you any information on what to do with your money. I'm only telling you what I will do with mine. And personally, I love the car. I think it's beautiful. I think it's not, I don't think it's a direct competitor to Tesla, but I do think it will be a direct competitor to any luxury vehicles such as the Mercedes-Benzes of the world, and maybe even like whatever other luxury cars, the BMWs or whatever is an expensive sedan out there. This is a very nice car. I do think that it's going to sell well if it ever gets down to being a production vehicle, but only time will tell, guys. So just be very patient, because the majority of the money that's made in this world is made when you're patient, not when you try to FOMO in or YOLO in, just like these guys do on Wall Street Bets. So be very careful with that. And with that being said, guys, thank you for watching this video. And if you want to learn more about what we do, check out one of the videos that's on the screen right now. If you've liked this video, please give it a huge thumbs up and share it with anyone who you think would like to see it. And if you're new here, don't forget to subscribe and turn on the notification bell. Thank you guys for watching. I love you, and I'll see you next time.